and you are here at the Naked Trading webinar. We're going to talk about trend continuation patterns. So one of the things that I want to bring up, so my name is Walter Peters. I did a PhD in psychology. I'm a full-time trader, and I wrote the book called Naked Forex, if you may be familiar with that. So Naked Forex is a book largely inspired by Thomas Bulkowski. He sort of got me off in the direction of looking at chart patterns and testing patterns and things like that. Bulkowski's book, which I think the first one I read was called Encyclopedia of Chart Patterns. That sort of inspired my book Naked Forex. And I did, combined with Bulkowski's patterns and Forex Tester, I was able to find some strategies that seemed to work. And generally speaking, what I'm looking for when I take my trades is I'm looking for the market to run to a support and resistance zone, an area on the chart where the market has repeatedly found support and resistance, and then it simply prints a pattern that tells us what is going to happen. Is it going to break higher, break through that zone and break through it, or is it going to bounce off of it and reverse, or those are really the patterns that I use. Now, when we talk about trend continuation patterns today, I want to give you patterns that you can use without indicators that may or may not incorporate support and resistance. All right. So one of the reason why that is so critical is because typically what will happen is if the market is in a trending pattern, you will get reversal signals left, right, and center, and you will see the market blow through those reversals and keep going in the direction of the trend. So with a strong trend, reversal signals get blasted. That's the Achilles heel. Reversal signals or swing trades, they can work quite well, but when you're picking these spots on the chart with a strong trend, they just don't work, obviously, because the trend continues. So and then at the end they will, and then it'll be a great trade. But those are almost the easiest trades to take in terms of making money, because they move so quickly, so fast when the end of the trend comes. Even if it's going to go into a consolidation period, it'll often move really, really fast, really quickly. So let's talk about the three trend continuation patterns, keeping in mind, and you guys can go ahead and post your request for any of the charts that you would like to see. Pound New Zealand, Euro Kiwi, Euro CAD, the Swissy, the pound yen, the Canadian dollar, the dollar yen, whatever you want to see, the pound. Did I say the pound? I think I've said it a few times. Pound Swiss, Euro pound, whatever you want. We'll take that chart and we will use it as a example. Okay, if that makes sense. So I'll show you. Let's look for the first one. The first strategy. Let's see here. What do we got here in terms of that is a massive exhaustion signal right there. That's a big shadow, people. That is a massive big shadow on the Canadian dollar. This is an example of the first one I want to talk about. This is the okay. So this is how this one looks. What happens is, let's say that we were interested in defining a trend so long as the market was able to break above these highs here. And let's say we're going to use the close. So the close here or the close there, the highest close would be that one, and the second highest close would be that one. And we say, look, it looks like the market's starting off onto a trend here, but we're not actually going to call it a trend until the market actually breaks higher than this horizontal support and resistance level, based on this double top over here. Okay, so we advance, and you can see here we've got strong move up, retrace, strong move up. We've hit that level and we've broken through, and so now at this stage we can say, yep, we're in a trend. Okay. Hello, the chart image is blurry. I don't know if that's just for Chris. I'm not sure, Adinda, if your chart have good resolution. It could simply be the sometimes I think people have troubles on YouTube with, or I don't know. I'm not sure, Chris, if it is just for you or for other people. Please use the setting icon gear on the video, so you can change the resolution, I believe, and download a higher resolution. Okay, great. There you go. There you go. Thank you. Thanks, Adinda. So you can choose the quality on there yourself. So that's great. Now, this first strategy is really only for when the market's trending, so it's going up or down. Thank you very much. So there you go. Adinda to the rescue, Chris. You can thank her for that. Guess what's going on here? It's going up. It pauses. It goes up, and now look, we're starting to see possible retracement here with little tiny candles in the midst of a trend, right? And now we're starting to see some choppiness. It's not really going anywhere. Now it's going down. It comes back up. Okay, it comes back up. So this would be a retrace move, and then it finally blasted through it. So a retrace move here, blasted through it. We also had a retrace move here, but it was really brief. Whoops. Gotta delete that. This was the other retrace move right here. And it blasted through that. Now, what I want to point out is that this candle right here that I flagged with the arrow is what we call a, well, I'll write the rules up here for you. And we'll write it in blue. How's that sound? Trendy kangaroo tail. Whoa. Trendy kangaroo tail is a trendy kangaroo tail is when the market's in an uptrend or a downtrend. It goes into retracement phase, and then sort of as the ultimate stab against the trend, it will print a kangaroo tail. Now, this one is not a perfect kangaroo tail because the kangaroo tail rules, which I'll write up on the chart right now in case you've never heard the term kangaroo tail, which is one that I found in the book Come Into My Trading Room by Alexander Elder. That there's a small paragraph on kangaroo tail. By the time I read Dr. Alexander Elder's book, I was well on my way to testing Bolkowski's type patterns. So what Alexander Elder talked about was this kangaroo tail, and I think he actually mentions if the market goes, a half or 3/4 of the way, I can't remember, against you down the tail, that you should just get out of the trade. I use a stop loss on the other side of the tail, so I'm a little bit. I got my stops a little bit further away than Elder does. But this would certainly qualify as a trendy kangaroo tail because, and I'll mention it again here, because it fits all of these criteria. Now, bar one, there's one that it doesn't fit. So this is not a perfect example, but it was on the chart that I was on. So one, prints on support and resistance. Now, you might argue that this one is a little bit beyond support and resistance. You could argue that. But it's close. It's definitely close, whether it's on support or beyond support and resistance. The second thing that a kangaroo tail should have is it should have the open and the close are inside the previous candle's range. Open and close inside previous candle range. That is not the case here. So what we're looking at in this instance is not a true kangaroo tail. It's what we call a pseudo kangaroo tail. It's called a pseudo kangaroo tail. So really, this is not a trendy kangaroo tail. It's a pseudo trendy kangaroo tail. So it's kind of an advanced thing, but we can talk about other styles of kangaroo tails. But That's what this is. And the reason why, again, is because see how the open and the close are not inside the previous candle's range. The reason why you want to have the open and the close inside the previous candle's range is it's a sign that the market's moving really strong. If the open and the close are not inside the previous candle's range and it prints a kangaroo tail, it might just be a pullback in the midst of a really strong trend. So that's often the case. Now, what's nice about this one is that we know we've been going up for some time. We went up, we paused, we went up, we pulled back, we went up again, and then we pulled back again, and that's when we printed this kangaroo tail. So it's not a trendy, and usually the reason why a pseudo kangaroo tail prints is because the candle prior to the trendy kangaroo tail is so small that the open and the close cannot fit inside that previous candle's range. That's why you get that. But in this case, I wouldn't argue that at all. I'd say the previous candle, if anything, might be slightly bigger or average. It wouldn't be a smaller candle at all. So it's one of those things where you might not want to take this one, depending on how conservative you are. But in any case, this candle prints on the support resistance level that we've identified previously from this double top over here. Then the market prints a long-tailed kangaroo tail on support and resistance, and you're not going to see a whole lot of space. Now, in a normal reversal kangaroo tail, like a swing trade, you're going to see a whole lot of space. So you're going to have a large chunk of that candle that prints on a place on the chart where the market hasn't been there for a long time. Okay, so let me state that another way, just to be clear. When you have a king, so here's another trendy kangaroo tail, but this is really early in the trend, so I wouldn't have taken that one. But on a normal reversal kangaroo tail, what you'll see is, let's say that we had a kangaroo tail down here. So if you had a kangaroo tail down here, you would probably see something where there's a lot of space. A lot of that kangaroo tail prints out a unique area of the chart, and you can pull that space all the way across, and you see no candles in the way. That's a really good sign that you have a potential reversal point. So that becomes a really important rule when you're using the kangaroo tail to get into reversals. But in this case, we're not getting into reversals as much as getting in at the exhaustion of a pullback. So trendy kangaroo tail just tells you that you're at the end of a pullback. That's all it's telling you. It's the end of a pullback, and we're probably going to go up again now. And the reason why is because that tail is so low in an uptrend and it's so high in a downtrend, but the tail is so low. There's a lot of people here that have that like the reversal traders that have their sell stops here, right? And there are also people that went long in this area and got chopped around and had their stop losses down here. So you have reversal traders that are waiting for the market to pull through here so they can sell. They think it's going to reverse and come down here, which, by the way, is the majority of you can see these people if you use this link. Go to fxjake.com/crowd. And what you'll notice is that when the crowd gets into a point where they're all going in one direction, what happens is, isn't the one on April 17th? Yes, but the problem with this one, this is actually a completely different strategy. For those of you that know all of my advanced stuff and blah, 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 this would be what we call a sword trade, actually. So it's not really a trendy kangaroo tail because it's so early in the reversal. And maybe we'll do a webinar about sword trading another time. But I wouldn't classify this move as an uptrend. I would classify it as a bounce and a move up and move down here. But I wouldn't, at this stage, I don't think you can say that you're in an uptrend. I wouldn't. I would say that you're in a very choppy market. This to me would not be an uptrend, right? So that's why I wouldn't classify it as a trendy kangaroo tail. That's the only reason why, because you're right. It does fit all of the criteria. It's a beautiful one. In fact, it's just too bad that we only had two candles going strong up before we saw that. So, but this fits perfectly in the sword category of a trade. And those can be extremely profitable and high reward to risk and blah, blah, blah. But it's not what I would call a trendy kangaroo tail. So there you go. Great question, Franz. That's a really good question. All right. So in this case, we wait at least 2 candles is what I like to do. If the market trades higher, I put my buy stop above the high of the kangaroo tail, stop loss down below low, and you can see it was triggered on the very next candle. It went up. Then you would wait for the pullback here. If you got another kangaroo tail, another good one would be somewhere around here. Again, you want it to hang lower. Ideally, it does something like this where the kangaroo tail has the lowest low of all of the candles in consolidation. Let me write that down. It's a really important characteristic. For a bullish trend, trendy kangaroo tail has the lowest low of the consolidation. Consolidation just means the pullback, the retracement, the directionless market, right? Trendy kangaroo tail is the lowest low of the consolidation. That certainly is the case here. Okay, cool. Yep. Are there any questions about trendy kangaroo tails? Targets. So for a lot of people, trendy kangaroo tail targets can be trailing exits or things like that. I mean, those are usually pretty good sign. Like those are usually pretty good ways to get out, is to use a trailing exit or a really aggressive target, those sorts of things. Cool. If this isn't making sense, or if there's something where you're stuck with, should we look for any? Okay, good question, Chris. Chris, thank you. Really good question. Should we look for them on any specific time frame? No. Here's what I will say about this. A friend of mine scalps the 5-minute charts, right? And he does quite well, and he takes a few pips in most cases. And I would never trade the way that he trades. However, I'm in the early, very, very early stages of testing one of his strategies on the daily charts. And I suspect, well, so far it's going really well. It looks good. I mean, I'm just starting to trade in forex tester. If you haven't used forex tester, it's a brilliant tool. With the way, the combination of forex tester and the Bulkowski books are really kind of what got me to the point where I knew that I could do it as a trader, because it took me 4 years, of chopping around. And I know some of you can relate to that. But the point here is that higher time frames across the board, most traders I've run into have more success the higher the time frame. The added bonus is that you do not activate your nucleus accumbens, which is the part of your brain that's activated when you do cocaine, have sex, or gamble. Okay. So it's the area of your brain that wants to party. And the bonus that you get when you trade the daily charts or the weekly charts or the 4-hour charts, things unfold in such a slow, drawn out process that you're using the planning area of your brain. You're using the frontal lobes to trade. Okay. That's good. That's the most rational part of our brain, where we can, that's the part of your brain when you think to yourself and you feel like, oh, I'm going to punch that guy in the mouth, and you don't do it. That's because most of what your brain does is restricts you from doing stuff. And so you're using that area of your brain. When you're trading the lower time frames, you're using this area of your brain, which is the reptile brain, which is the very impulsive part of your brain. And it can be hard it takes a special type of person to be able to wrangle that in. Or you have to have some accountability, which is really what all professional traders have. They have someone to be accountable to. So so the point is, yes, you can look at it on any time frame, but my suggestion is to always start on the higher time frame, especially if you have a job or something. Who really wants to go to work for 8, 9, 10 hours, come home and sit in front of the screen for another 4 or 5 hours? Nobody. So managing daily chart trades is the way to go, I think. But I'll get off my little soapbox. I know I always find a reason to launch into that little diatribe, but it is, I believe, pretty good stuff. Okay. All right. So that is your trendy pseudo, or your trendy kangaroo tail. In this case, it's a pseudo because why? Because the open and the close were not inside the previous candle's range, so it did not fit the criteria of number 2 here. All right. Now let's move on to another a trend continuation pattern. Let's see if we can find one here. Really? Euro yen. Let's see. Let me see if I can find one for you guys. Actually, that's pretty close. Let's see. So this could be a trendy kangaroo tail here after a very short pause in oil. This is West Texas crude, and you can see here what you might be looking at as a short below the most recent daily candle, yesterday's daily candle. This one doesn't have very much space because it hasn't been consolidating for long, but a sell order below the trendy kangaroo tail or even the candle before it down there could be a safe way to short oil. And the nice thing is you got a really nice zone down here on, you can move to break even or take some profit if it gets down there, which looks like it might be about 1-to-1 or maybe a little bit better than that on, as far as reward to risk. Let's see if we can find another pattern here for you. All right. Well, here's another one that's here's another one that's well, I was going to show you that example, but what I really want is a really clean chart that doesn't have too much ugly movement, I guess. I want something that's a little bit more less volatile. So let's see. CAD Swiss. Not really. Not really. What's the daily? Okay. Okay, this one's pretty good, actually. Okay, let's look at this one. All right. Now, what I want you to pay attention to is a line chart here. See how the market made this move right here? Look at this. That is where the market bounced through this level, hit it. It stopped right here. First of all, the most important thing is that the market paused here for 2 candles and finally broke through, right? So you could say, look, the market was falling here and hit it. 2 candles, it paused, it broke through, bounced back up, hit it again, and fell. Now over here, there's a bullish bounce off that same level. And then now let's see what happens over here. Now this is where it gets interesting. So we've established this as a zone. You can see on the line chart, there's a bend there, there's a bend there. It's a really nice zone. But guess what's the most interesting thing to me is this right here. Because what we have here is an example of an Acapulco, okay? This is an Acapulco trade. We can do a whole webinar on the subtleties of this, but for right now, does it matter if the kangaroo tail closes above or below the support resistance line? Okay. Okay. Friends, if you're in a strong trend, you may not even look at support and resistance. I'm just going to throw that out there. I believe that you're better off trading off of support and resistance, and the very best bullish kangaroo tails will have an open and a close on top of, here, this is an example. So let's say this is my zone right here. This line, I'm going to color it, I don't know, green, okay? And we'll make it a nice solid line, all right? So here's my support level right here. Now, I believe that the very best bullish kangaroo tails look like this, where the market has the kangaroo tail has penetrated the zone and snapped back up, and the head of the kangaroo tail is right here above the zone. And likewise, the best bearish kangaroo tails are like this one here, where well, it's very small. This one's probably doesn't have a long enough tail, really. But when you're looking at trendy signals, sometimes you could afford to be a little less picky because you've already got the trend at your back. But in this case, again, neither of these would be trendy kangaroo tails. I'm just talking about the kangaroo tail itself. I'm not talking about all of the context around it, okay? But these two situations here, this was an ideal bearish kangaroo tail from the point of where the candle prints on the zone. The head is below the zone, the tail is above. Same thing here on the bullish one. The head is above the zone, the tail is below. That's ideal. That's what I look for. Again, if you're trading with the trend, you might decide it may not be that critical support and resistance because you feel like it's just going to keep going in your favor anyway. You kind of have, it's kind of like being a share trader, a stock trader. If you're trading stocks, all they really have to do is decide when to buy, and then they have to decide when to sell. When you're trading futures or currencies or whatever indices, it's a different story, isn't it? Because you have to decide, am I going to buy or am I going to sell? And then when am I going to get out? It's a different story. But that's how I look at kangaroo tails, and trendy kangaroo tails the same way. I will say though, sometimes I've found it prudent to maybe not be as picky when you're trading with the trend. You're just kind of looking for any kind of sign. So you might take a trendy kangaroo tail or a trendy big shadow just kind of because it's there and not because it's like this perfect setup. Okay. All right. Okay, we'll look at the Aussie Swiss too. All right, we'll definitely look at that. So what this Acapulco setup is it's a 2-candle setup. So it's like the big shadow in that it has 2 candles. So here's candle number 1. This is what we call the cliff candle. So if you know the divers in Acapulco, one of them is a the cliff is where the diver jumps off and they do these beautiful dives into the ocean. And so the cliff is this big candle right here, and the diver is the little one after it. So all the Acapulco is that you've picked a direction, you know the market's going in one direction. So this is pretty bearish. From this swing high here, which again has a couple of kangaroo tails, although there's no way I would take this first one. The only time I ever take double kangaroo tails, 2 kangaroo tails, is when the second one is bigger than the first. So this would actually fit my criteria. But again, that's kind of advanced kangaroo tail. And we could do a whole webinar just on, the 8 different types of kangaroo tails, really. If we wanted to, we could do that. That's actually not a bad idea. I should write that down. Maybe we'll do one next month. But for right now, I just want to be really clear that it looks like it's in a downtrend. These big bearish candles here are your clue. And it wasn't, I mean, it did break this swing here, but it wasn't able to break this swing high. So it's still making these lower highs here, although this one was a little bit of a false start, wasn't it? So we see the market, with the Acapulco, we see the market break through significant support and clearly close beyond it, which is exactly what happened here with candle 1, the cliff candle. So see how it clearly closed? You can see the lowest close before this candle closed was actually where? It was actually this close. That was the lowest close right there. So this candle right here, this red one, it closed at 73.66, and this candle right here, the cliff candle, closed at 73.18. So it definitely closed lower. It's definitely closed beyond the zone. Now, that's what you want in a cliff. Ideally, it's a pretty big candle. Now, this one did snap back, and ideally it would have closed a little bit closer to the low than it did, but it's still clearly closed below the zone. All right. Now remember where this zone came from. This zone is, we've drawn it on the chart because the market bounced there and it bounced there. Okay. We knew that this was an area of support and resistance. We knew all this support back here. We saw this touch here. So it's clearly an area. It wasn't like I just drew it right now. It was based on that. So then that's the cliff. Does that make sense? The cliff is that. The diver, now the diver on the other hand, is a candle that retreats and comes back up to, in many cases, touch or come really close to touching your support and resistance level. Now, I want to state a really important rule here. The cliff candle should really be smaller than the diver. If the cliff candle has a wider range, more pips in the range than the diver, I'm not going to take the trade. Those, I've tested it, and for me, and don't take my word for it, go out and test yourself. But for me, I found those to be more likely to fail. So what I want is a small candle relative to the larger diver, or so the larger cliff. So let's just write this down. Rule number 1 is the cliff breaks your zone. Cliff closes beyond zone. I say closes beyond zone because it could close above a resistance zone or it could close below a support level, depending on if you're in a bearish or a bullish trend. The number 2 rule is that the diver closes, diver attempts to retouch the zone, right? Diver attempts to retouch the zone. And number 3 is that the market trades lower than the low. Now the lower low could be on the diver or could be on the cliff. It doesn't really matter. So in this case, the cliff has a lower low, but sometimes the diver will have a slightly lower low. And the diver tends to, it's not always an inside candle, but in this case it is. Sometimes it does have a slightly lower low than the cliff, and that's okay too. But as soon as the market trades lower than the low of the cliff, and I don't think it has yet, this one, this CAD Swiss, the low is 72.82. So I would be selling at 72.75. And the low here is at 72.78. So it hasn't quite gone to that point where this would be a trade. But it certainly looks like it's, it's close. It's very, very, very close. And so that is an Acapulco trade. It's basically a breakout, a breakthrough, or a penetration of a zone. A zone breaks down, and then the next candle comes back up and retouches it. And oftentimes on lower time frame charts, you'll see that it's pretty clear. So here's on the 1 hour chart. So I've gone to the 1 hour chart and I'm on the line chart. You can see the market's broken through the zone here on the 1 hour. It pulls back and it kind of gets really close here on the 1 hour, as you can see. That's the pullback, and then it falls again. So we still haven't triggered the trade yet, but that's the idea. Does that make sense? Does everyone see what the Acapulco is all about? I know there's lots of different. So what I'll typically do is I'll put my stop loss above the diver. Sorry, above the cliff, the big candle, the first candle. Stop loss goes up there. Sell order goes down here below the lower low, which in this case is the cliff candle, not the diver. And then I get triggered and I go. Okay? All good on that? All right, sweet. Okay, now I want to talk about sort of the last a bullish trend continuation pattern, which is tricky, but let's see if we can find it here for you. I want to find a good one. They're a little bit rare, but they are so fun to trade. I love trading them. Let's see if we can find one here. Almost. We almost had one there. Let's see. I don't know why I'm picking the pound Swiss. Maybe it's not a good pair for this. Come on, pound Swiss, give me something good. That's close. Close, but not quite. Close, but not quite. All right, I'm going to try a different pair. What I want to do is give you guys a really good example. So I don't want to just choose any old chart here. What were the one you said? Aussie Swiss. We'll take a look at the Aussie Swiss chart just because someone had a question about that. And then the CAD yen as well. We'll look at those in a minute, guys. I promise. Aussie Swiss. So this is an example right here of what I would call another Acapulco. Does everyone see that? Right? Why is this an Acapulco? Do you see what's going on here? This is another. This is in many ways this is a better example than the one I gave you. Now we're still early days on this current daily candle, so we don't know. You know, if this daily candle were to close above this zone here, then it would not be an Acapulco. It would now be a possible fake out, like it's a false breakout. But if it stays wicky and maybe goes up a little bit higher to try and attempt to touch that zone there, this would be a brilliant. And what's even I love about it, it's got room to go all the way down to here if that would be a great target. So that's a really good looking one. Let's see if we can find the other. I want to show you a different pattern though. Might be better off going with a might be better off going with a 4-hour candle, 4-hour chart. There's a little trendy kangaroo tail, but it's really small, and you can see it would have been stopped out because this candle actually went lower. So if you put the stop loss below low, you get stopped out. You get triggered on the next candle, you get stopped out on that one, unfortunately. Wow. I really want to show you one of these because they're probably one of my favorite. Actually, well, okay. This is kind of weird. It's not really a good example. I want to give you like the best example so that you see the pattern. And I'm sure you guys have seen this pattern. It's just not, I think people kind of mess up the way, the approach that they take with it. Let's see. All right, let's move on. I'll move on to a different chart. CAD yen. We'll try CAD yen, see if we can find one there. Okay, CAD yen. So this is the CAD yen 4-hour. And I'll be looking for one. All right, well, here's an example right here. Okay. This is an okay example, so we're going to use this one. Okay. So what we have here is so I want you to pay attention to the market from here. So what's going on here is the market did an upswing. It peaked over here, which kind of looks like some of the yen charts actually look like this right now. And then it fell, went lower, pulled back, fell, pulled back, fell, pulled back, fell. Now, what's fascinating about these pullbacks is they've all been contained within this trend line here, right? Now, this is what I call the squeeze play, and it's one of my very favorite trades because what's happening here is the market's been squeezing lower in this case. It could be squeezing up higher, but it's squeezing lower, and each pullback is contained by my trend line. So it bounces off the trend line, hits the horizontal support and resistance level, bounces off the trend line, hits it again, and it keeps hitting it. Normally, when you see this pattern, if it breaks and closes below this zone here, it will go hard in the direction of the flat horizontal support and resistance zone. And that's exactly what happens here. You can see it broke through, it closed. Sometimes you'll get a pullback up to this level where you can take a trade off that pullback, and then it just goes. And that's exactly what happened here. So in this case, I like to put my stop loss above this little swing high here. So right here, it was your stop. So in this case, if you wait for it to close lower, it closes down there, the stop loss. So it's about 55 pips of risk. And if you would have maximized it, you had 110, so 2 to 1 on, that's the maximum. Now it did pull back again, right? And it kept playing with these the zone here, and then it finally fell a little bit further. Right here, it fell from here to here, but it didn't stop you out. These highs here didn't stop you out, but I would have been at least moved to break even at this stage. So this would have been either a profitable trade or possibly a break even trade, but it's highly unlikely that you would have waited until you got stopped out over here. So there was room for profit, even if you didn't take some here. There was some room for profit here too. So that is the squeeze play, where the trend line pushes the market into a horizontal support resistance. And now there's another one that will happen here called the rhino, where you will get a kangaroo tail breakout, or a bearish breakout here, and then the next candle is really bullish and it closes right back up above the zone. In other words, if you add the two candles together, it would be a kangaroo tail. So those are false breakouts, and you can fade those and go the other way. So it's kind of like the end of the trend. But most of the time, you'll get a breakout just like we see here. Does everyone see that? Does that make sense? I hope I'm making sense here. I just want to be really clear that the main point here is that you need a really well-defined support and resistance zone, and it must have come back to hit the trend line at least 3 times. 1, 2, 3, 4 in this case we have. Those are important to me. And you can get on a close below the zone, but sometimes it makes perfect sense to wait for it to pull back and hit that zone. In this case, it did pull back on the very next candle, almost kind of Acapulco style, but that's what we're looking for here. Now let's get into your questions, guys. I'm going to jump into the charts. If we don't have any more questions about the 3 setups, so now you have the squeeze play in your pocket, you have the trendy kangaroo tail, and you have the what was the other one we said? The trendy kangaroo tail, the Acapulco, and the squeeze play. Yeah, you got those 3 in your pocket. So that's something to test for sure. All right. The CAD yen. Does it matter if the kangaroo tail closes? It says CAD yen 2017 331. Okay. Let's see the CAD yen 2017 331. Now I'm actually waiting for a potential buy trade on the CAD yen. I don't have that yet. It's a totally different system. We'll talk about this system in another webinar, but the CAD yen 331 is right. 331. So 331 is right here. Oh, you're on 4 hour. Are you on 4 hour? I think you must be on 4 hour. Gotta be. 331. It must be. I think you must have GMT midnight close charts. So I don't have the same charts as you, friends. So I don't think I can see what you see, unfortunately. I think it's somewhere in here, Franz, that you're looking at. But I don't have the same. Yeah, I don't have the same one. All right. Sorry, friends. So I don't know what it is that you're looking at. Chris, Aussie Swiss on the 4 hour. I think the kangaroo tail already formed on the Tokyo train. Right now or recently? Like a bearish kangaroo tail? I don't see one, Chris. You guys might have so my charts are 5 p.m. New York time close, and some traders, many other traders have the midnight GMT close. So I just like these charts because I don't like that silly little 2 hour candle that's a Sunday candle. And you get those little 2 hour candles on Sunday. So it's like a 2 hour daily candle you have to ignore if you have midnight GMT close charts. So that's the only reason why I don't like those charts. All right. So does that make sense? Cool. Any other charts that you guys want to see before we shut it down? Sorry, guys, that I can't see that. If you were looking at this kangaroo tail, Chris, this would be not a trendy kangaroo tail because it's been going down. I'm not sure if you were looking at that one, but that would be, I wouldn't take that one at all. I'm really interested to see what happens here on the CAD Swiss. It's interesting how it, you know, it broke through the zone here and it's come back and touched this level. So that's a very interesting chart to me. New Zealand yen is also quite interesting to me as well. Oops. Yeah. With the bearish belt. The pound Aussie is on a tear. If it can stay above this zone, the pound Aussie might be good for a bounce right here and go long. I like that idea. And silver and gold also, like, eventually gold is going to close this gap. I don't know when it will. And eventually it's going to break this trend line. I don't know when it's going to do that either, but both of those are things that I'll be waiting for. And you can see silver here is in this, following this really long trend line. When it breaks that trend line, that will be interesting too. That's a different strategy. We'll talk about that trend line strategy in another webinar. All right, guys. Bearish one, but not on a zone. Okay, Chris, I don't, you had a bearish kangaroo tail or a bearish big shadow or? Yeah. My chart doesn't show a bearish kangaroo tail, or I suppose the current candle could be a bearish big shadow, but it hasn't closed yet. The current 4-hour candle. I think it's because your charts are probably slightly different to mine. So all of these, so this one wouldn't qualify as a trendy kangaroo tail because it's against the trend. The trend's been going down, and this looks like a pullback during a downtrend. This one wouldn't qualify because it has no space at all. And same with this one. This one has no space at all. So I think people get into trouble when they start trading these with no space. Even a trendy kangaroo tail has to have a little bit of space. In other words, it has to stick out from the recent consolidation. And in both cases, these ones don't. And they're bullish anyway. So we've got 1, 2, 3 bullish kangaroo tails, and it's a downtrend. So I wouldn't trade those at all. Yeah. Do you think price action trading U.S. charts, closing charts are taken? You love to trade on U.S. closing charts, I think. Yes, that's right. Yep. And again, like I said, Kareem, the only real reason why I like trading the New York, well, it's better for me because in Australia where I live, the charts close earlier in the morning. So early in the morning, I can make my assessment for what I'm going to trade later in the day and what I hope to put in my trading platform before the London Open, right? So that's one thing. And then number two, I don't like having a silly 2-hour daily candle. I think having a 2-hour daily candle is ridiculous. And if you have a GMT close charts that close at midnight GMT, they have that additional 2-hour candle every Sunday. So what do you do with that? Most traders I know, they just kind of ignore it. So my preference is to trade the 5 p.m. New York time close. They just fit my lifestyle because I have little kids. I get up early, you know. So I'm up early. I just check the charts, see what the daily close is on my charts, go through the dailies, decide what I'm going to flag and potentially take later. I make a video for my members, tell them what I'm going to take, and then the rest of the Asian session, I'm not going to do anything until basically now, when London opens again. Then I start entering my trades, right? Make another video, that's the thing. So that's basically how I approach it. So I do love trading on the U.S. 5 p.m. New York time close charts. Absolutely. I mean, I don't know what people do with that 2-hour Sunday candle. I guess they just ignore it. It's kind of weird. Cool. Thank you so much for your time. I wish all of you a very happy trading week, and we will see you at the next Naked Trading webinar. Take care, guys. We'll see you soon. Bye. See ya. Bye.